And a very good morning to you, and welcome to the TriggerCharts pre-market rundown for Friday, December 17th, 2021. This is running up into one of the last of these for the year, because next week, of course, is Christmas weekend, and we have no market hours for next Friday. So keep that in mind, that there is going to be a significant amount of movement over the next week or so, because we have volatility that kicked up very dramatically, and we have a short week going on. Hey, it's Andrew Horowitz. I am the co-founder of TriggerCharts. Thank you so much for joining me this week and every Friday at 9 o'clock in the morning. This is going to be recorded. It's on the TriggerCharts.com website, where you'll also find a great amount of educational material, understanding what is going on with market theory, understanding what's going on with the idea of the indicators and how they actually operate, and why it's so important to look at market profile that was made famous by Peter Stottlemyre back in the day and used in a new way with the algorithms that we put together in order to create the indicators that you see right in front of you on the right side of the screen right now. So I think it bears you digging through some of the things, because there's a lot on there on the website on TriggerCharts.com. And also you can see all the things that are available over on the TradeStation trading app platform that we have to offer. Some of them are free, just trials. Some of them are cost items. But I got to tell you something I have heard, and I know that basically you will make your money's worth by understanding and trading, by just doing things like protecting yourselves for being involved in things that are maybe not, that you shouldn't be. Keeping you on the right side of the trade. One more point, investing involves substantial risk. Here's our disclaimer. Past performance is not a guarantee of future results, and loss of original capital may occur. Please consider this for educational purposes only. And as always, use your best judgment when investing. Okay, so let's just start for a second. Let's just take a moment and a breath to look. We saw that the Dow futures were actually up for a while in the pre-market. They're starting to slide a little bit today. Bad reversal yesterday. Bad reversal this week. After we saw what happened with the Fed, everybody was really excited about, wow, well, the Fed isn't as dovish or as hawkish or as, it's kind of right where they thought they'd be. So what happened was a lot of trades had to unwind. There was, going into the Fed meeting this week, the rate meeting on Wednesday, the thought that, we're seeing all this inflation. We're seeing the PPI at 9.8%, and markets are set up to really take a drubbing if, in fact, Jay Powell comes out and says something really hawkish. Well, that unwound when he came in and said, pretty much we're going to slow down on our purchases of bonds, both all the above, government and mortgage and corporate. But yet we're going to be raising rates, but we're doing it in a measured pace. So that kind of was right in line with what everybody thought was going to be the case on Wednesday, and the shorts got spooked and covered. Now, if you looked at that, it was kind of interesting, and it's very difficult to stay committed to one side of the market right now, and probably you shouldn't be, because we're seeing what's called railroad tracks, and that's our theme for the week. If you look to the right here, and I'm going to show you what this looks like right now, because it's very apparent in the last couple of days. When you look here, right at this kind of movement that we're seeing on the right-hand side here, you're seeing this kind of move up, move down in relatively similar fashion. No outside bars to speak of that substantial. Inside bars either. It's kind of like we hit the top, we hit the bottom, came in, tested the highs again, and then it's just moving like railroad tracks, right? Just railroad tracks just move in one direction, up, down. Think of that, what we're seeing right here, as the same. We're seeing that there is this railroad track forming. That's never a really good sign. It's indecision in the markets, inability for markets to make any progress beyond where they are, and they kind of, if you think about it, cancel each other out. So what we are seeing right now is a very concerned market, a market that really doesn't have any direction to speak of. In the morning today, we're seeing a 168 points down on the Dow. There's some fair value that's in there, that's stuffed in, that should not make it as bad as it looks, on the open at least. We have the ES down another 0.67 or 30 points, and again, almost 1% down on the Qs. Right now, if you look at where we are, we're 383.23, right in line with where we are on that support that we've been holding. A few times moved below, but held right above. Question now goes to, where do we go from here? If we have good support at these lines right here that we drew on a daily basis, where's the next level? frankly, there's not a lot of great levels. Even if we expand this out a little bit, the top of this is really an important area, and I would say 380 down to the $3 from here could be a really important level. I would also say there's been a lot of damage done to stocks underlying the indices. There's a recent piece that I read, and it showed that the average stock in the NASDAQ, this is as of last week, the average stock in the NASDAQ is down 39% from its all-time high, from its 52-week high. That's a substantial move. We're seeing that, I think I mentioned this whole idea of a sinkhole alert that I talked to you about and pressed you about, and I said, be aware of this. Not necessarily that it's going to last forever, but in an interim trade, in a short-term situation, it looked like if we were going to have a problem if many of these major stocks, the big names, the Microsoft, the Amazons, the Netflix, the Teslas, if those all broke, we were going to have a problem because underneath there was a real nothingness. There was a hole. Kind of like what happens with a sinkhole, right? Once that crack opens, there's a big cave-in, which is what we saw the last several days. My impression of what's going on, we still have end of the year. We have the potential for Santa Claus, quote-unquote, Santa Claus rally into the end of the year. There's a lot of indecision. It really could break in any direction. I think you got to look at your stocks and be careful to really understand what trend directionally where you are, what bias you are on a long or short. But again, these railroad tracks are really important because the market's essentially stuck between two bullies. When we look at this and we look at this idea that you have, this both the longs and the shorts, the committed, the uncommitted, very weak hands. You're looking at end of year possibly unwinding due to tax issues. And a lot of this is due to Fed-induced moves, just grinding away. What we have here right now is that the UK raised rates, the EU is keeping rates low. The situation in Turkey is just a disaster with the lira plummeting to all-time lows overnight, down 7.5% on the fact that their president, Erdogan, believes that, lowering interest rates actually helps to stave off inflation. Kind of interesting. We also have the pandemic on and off, this whole idea that, yes, the pandemic's on and it's bad. It's not as contagious. The variants are going to be okay because we have these vaccines. And that's okay because that's all helping, but we have to, you need a booster. Kind of this on and off situation on a daily basis. It's really frustrating a lot of people and saying, where are we going here? Then you have on top of it all of these areas that are starting to shut down. You saw that the UK is kind of, really clamping down. Australia has always been a problem. Big news out of a lot of countries around the world that we have some additional issues that are pending. So one of the things that we saw was this, the high price stocks were slammed. Yet the old school stocks, the banks, etc., doing pretty well. As a matter of fact, if you look at the month to date, the Wilshire large cap, or the large cap, we'll call it, value is up 4%, where the growth is down, 1%. That's a 5% spread this month alone in that. Question is, are there any bargains? I think a lot of you are probably thinking about that. One of the things we're seeing is, what was loved yesterday is hated today. We see this from time to time. I would venture to say that there's a lot of leverage in the markets and a lot of people have been really buying on a significant amount of cheap money. Does that make sense? I think that makes sense, right? And what's happening is that that's just coming out. Question you have to ask yourself is, are you going to buy the falling knife? Are you going to be looking to grab this on the bottom when it gets to the bottom here? Are you willing to take that, or is it going to continue down further, into this level here, where we have, the opportunity for maybe better support down here? Or is it worthwhile to really start looking at right now? So I would say to you that you have to be very selective right now. There are some things that happen, like a stock we'll talk about in a minute, that I like actually, but you know what? All of a sudden the news changed yesterday on the fact that the Consumer Bureau is looking into all the companies in the space that are potentially, they're concerned that, is this going to be good or bad for the consumer? It's really just a news item. They're just looking into it, but they cracked the stock by 13%. So we're seeing an oversell situation last week, on the news, but yet there's a mismatch on really the amount of punishment, or for that matter, the amount of upside that stocks are taking. The big issue right now, rotation. Rotation is a really big issue that we're seeing, and you have to really look at what's going on in terms of this movement through sectors where we may have this, continuation of, we kind of went from technology, then we go into banking and finance, then we'll move into more safer things, utilities, then we move back, and it kind of, the whole thing just moves right back in eventually. But right now, like I said, you're seeing that we have some real significant movement in the indices due to the fact that there's just a lot of uncertainty right now. Getting closer to the opening, getting close to the end of the year. A lot of people want to book their profits at this point. There's my sinkhole discussion right there again, talking about that. We're in a downtrend right now in an intermediate. You should probably lighten up, reduce positioning. Look for where you want to buy. If you do want to buy, do it light. Maybe if you're going to buy on the dips, maybe you do it a little bit lighter than you would instead of going in all, full position. Big issue, inflation. We got rates that are going to be moving up. Not really, not yet, but okay, they're thinking about it, but yet we're not seeing rates move up, just to let you know. Stocks, well, they're being priced accordingly. Bonds, interestingly enough, even though we have inflation, even though we're supposedly having higher rates, stocks are moving down, bonds are moving up, and of course, this is kind of how we move through the cycle, if in fact there is that cycle that goes on, that people are looking to kind of bulk up on some of their cash right now. Question is, are we going to have the pandemic plays coming back again? The Zoom, the Peloton, these stocks that just were absolutely obliterated over the last several weeks. Quick question for everybody. If you're listening to where we are right now in this, on the live webinar, how many of you are trading cryptos? Whether it's spot, whether it's futures, or maybe even ETFs that are some out there. Just give me a quick chat in the, in the chat box. I'll put a little note in the chat box. You see it pop up right here. Tell me if you're actually trading on cryptos. I think it's kind of interesting what's going on right now. I mean, right now, Bitcoin's down about 3%. We're seeing the same with some of the other areas out there. One of the things I want you to look at is looking at buy orders. Where are you placing your buy orders? Look to place them well below where it is on a support level, as opposed to looking at necessarily getting right on in. What I mean by that is we're seeing a lot of volatility right now, and one of the things that's being rewarded is finding those stops that people have blown through, and the cascade that happens on crypto, and the buying that happens on those absolute support levels much deeper than you would think, and those have been very rewarding. Did that last weekend with Ethereum, paid off very nicely, but you have to be careful with that. But if you're looking for a dollar cost averaging into that, I think it's kind of something to look at. One of the things that I have been looking at more and more, I look at a lot, but more and more, is how well the altimeter and autopilot does on entry points, especially like on a 15-minute basis on Bitcoin, Ethereum. Really kind of cool. I think I'm going to change this one today. We'll change this to 15-minute over here. And for example, BTC USD, enter. Did that work? No, BTC USD, still not working. BTC USD, enter. What's going on? BTC USD. Well, so much for that idea. Let's put it in here, BTC USD. I don't know what's going on with that. All right, there's your 15-minute. Really kind of interesting if you look, and we kind of go back just a little bit, kind of just show you this. These breakouts have been called really nicely, and then you got to get out right when you see a new formation. You got to be quick on a 15-minute, but these kind of little mini breakouts don't take you there. You put a stop right underneath the red, and then you look at this, and you can see there's a nice up move there, a nice short move here, another short move right here, another short move right here. Beautiful long from 47.2 all the way. Where'd this go to? Let's see. 47.2. Formed a line right there. You would have kind of gotten out about here, about 48.4. In here and then out right on the stop. You would have been no loss, no gain. Over to the right here, though. And pin out of these trades, See how well this is working? Let's go to the end here. You've been out, and now it's calling for a short, but it's kind of right at the level there. But these shorts have been really nice and cascading, as we're seeing. If you look at the altimeter, which is kind of interesting, you got altimeter. My stuff isn't working very well. There we go. You got these altimeters that are going lower and lower and lower. What I look for is the blue line. See this blue line? Track your blue lines, track your blue lines, track your blue lines. They're all going down. When that happens, what you want to look for is the fact that you're in a general downtrend, right? That makes sense. So therefore, the odds on trade are to the short side. Be careful, again, when you get above the red, right here we have some congestion, but it's not that terrible once you get above, I would say right here, about 48,000. And just something to consider. What else are we going on here? Economics, we saw PPI 9.5% or 9.8% this week. Ouch. Retail sales are light, Philly Fed are light. We got inflation, we got sales that are light, we got economics that are rolling over, we got the Fed with nothing more they could do. In fact, they're talking about going a little bit more into the into the space of increasing interest rates. And it's like, hello, let me get this straight. You're going to be increasing interest rates, and the fact that we're seeing that retail sales are light, Philly Fed is right, and even though we have inflation here, you haven't done it all this time, but yet we have into the teeth of Omicron and all that's going on around the world there, and now you're talking about increasing interest rates again. Hello, what am I missing here? So I think they should have probably stuck to the opinion that they are going to continue what they're doing, but just slop up some of the cash that they've been putting out there. Next week, short week, GDP, third reading on GDP, leading indicators coming in, out. This is important, PCE prices. But Friday, again, just to restate this, we will not be having this session next Friday. These are upside down. We're going to look at FedEx, EM, U, Roblox, Ethereum. We got some things to look out for last week. Also, here, let me see if this is working now. Can I put something in here? Oh, I see why. I go here. There we go. Let's see if that works now. There we go. Just had a little glitch in the system, I guess. All right, let's look at FedEx, up 6.6% this morning. Interesting about when we look at the daily chart of FedEx, and there's a couple things that I really want to focus in. We looked at this 278 line for some time and said, broke a little blow there, big problems, and it sure did. Currently trading about 254 right now, which is, let's bring that right down to the 254. Right about there. Trading right at the peak of that level. Is no mistake that they're like not letting it go above that peak, especially in a day that's downtrending a little bit here. We saw that there was a little bit of a pickup into earnings. There's a $5 billion share buyback program they just initiated, as well as the fact they beat handily, raised prices, and up their or can maintain their guidance for the end of the year, which is, or for the next end of their fiscal year, which is really good. So now what we're seeing here is a gap that happened right here. Again, what we do is when we look at all of this, we always do the same thing, right? We look left, we kind of look left, we look left, we look left, we look left. We always want to look left, and right here, there's a big gap that happened, and that gap was a big issue. That gap really showed us that the potential to move right through there from about this level that it had here, right here, up to this level right here was very significant. Exactly what it's doing right now. There's really no resistance within that line. The question is what happens after that. So currently starting to really move up a little bit more, 254 and change, 222 right now. Where are we going from here? Well, you really got to get above this buckle here, this 260 level. That's going to be hard resistance on the upside. Kind of, you look at the support turns into resistance. Right now it's flipped over to that side. Pretty hard to get back up, I think, to these numbers of the 300 anytime soon. Matterport, this is something we've been looking at, kind of this range we've been looking at right now, trading at 21.25, which is right about, what do we have, 22.02. So we're 21.25, a little bit below that range that we had talked about. I still think that, you got this head and shoulders pattern pretty much completed to a degree. Here's a little shoulder here, take the differential, and you're right back down to about 21.20. That's kind of the numbers we put in last time. This is also a high-priced stock, and it's, one of these names that was really doing well for a while, then just fell. It's in the real estate sector. It's maybe to a degree in the metaverse sector. Interesting play to keep on your watch list. Upstart, we talked about this. I tagged this way back when it looked like nothing could fail on this. Down another $3 today at 136 and change. This is getting to a point, 135 is getting to a point that could be actually really interesting support on this. I'd keep this on your radar right here. I think it's really interesting. And again, very similar chart you're seeing, this real big peak and this drop. Is it warranted to get to the 400 level on this stock? Probably not. Was it warranted maybe to get to the 160 level in this stock? Maybe. Okay, with where we're going. If we look at the general trend, we kind of go back a little further and kind of, think about a trend line that was kind of like this. So where is that? We're in that we should be over here somewhere, 220. And we're at 130 right now. So maybe there's something that's going on there that we have to consider. Obviously, another high-priced stock getting whacked. Speaking about whacked, nothing here, nothing going. Always keep this on your radar because there's news about something going on with the Trump SPAC, as we call it, or DWAC. You got to keep a look at that. Again, all these charts look the same. They all look the same, right? You got this big peak that happened, this euphoric, almost, I would say, this blow-off top to a degree in some of these names, and just rolled down. Again, does this really deserve to be back down on the gutter right now? was it overvalued to begin with? I mean, we saw this back when in April of 2021, dropping down to the 90 range. Could that happen again? I mean, we saw a major double in this, and this is another one of those quote-unquote metaverse stocks in theory. So when you want to look at this, is there good support? Well, yes, take that. Let's look at a line. Very simple. Let's take either your box tool, your line tool. It's up to you, whatever you want to do. And kind of look at where we are. I would say that, decent support right there at the 136 level. So at 130, below that, okay, so where do we go from there? Clearly, we're showing a short. We're seeing a little bit of a divergence on the momentum showing up right here, and we know there's weakness pre-market. Where are we going from here? All right, well, I would kind of like to say 129, 130. That's a really good level. 129.50. Again, you got to get exact, right? Do we have that in there already? Where is it? There it goes. Right. 128.50, I'd kind of call that. Again, you got to work with pennies and think about where you want to be, but there seems to be support and another knock at that level. That other level I draw early at 111.88 previously, also interesting. Roblox, again, same look. This major blow off top on many of these names. The excitement about the metaverse coming in, rolling down due to the fact that there's competition maybe now. But look, we have some support here at 95 right there, right? So let's draw that line in there. Kind of keep that in that range right now, right where we're stopping from back here on the peak, and then somewhere in between, right between our levels that the last one came in here. I think that was kind of interesting to look at. Affirm is a stock I was talking about that just got obliterated yesterday. Doesn't look that bad from this chart, but trust me, that was a pretty rough day yesterday. It's tagged down to about 92 and change. And why is that? Is there a reason? Let's take a look. Let's just take a line thing and kind of go here. Is that where it was? Yeah, that high volume, no, 94 and change, a little bit lower here, right? Right there. 93.84, kind of tagged down right to that line. We're seeing that there was some weakness that was happening anyway. And, I like this stock from a fundamental standpoint. You start getting the regulators involved, though. I start scratching my head and wondering, is this something I should be putting more money into? I do think we're going to probably see the attempt at a reversal today off the open. I also think that there's the potential to really close out after a scare somewhere during the day, a bit higher than the lows today. I know that sounds like duh, but I don't think we're really gonna. We took a lot of meat off the bone over the last few days and last few weeks. And it just seems like a little settling should be going on here. Rivian's dropping by about 10%. The numbers that came in weren't so great. 99. We're getting right below where it was on that IPO offering. Tesla also taking it on the chin right now. Elon Musk has been selling dramatically. 914 is the number where we're at right now. I kind of tagged this number of 997. Look at that. We came right into that yesterday and then bounced off and rejected it. So I'm going to kind of go down and see where we are now. Where is it? 914, I said? Wow. Yeah, it's 960. Yeah, you had that gap fill that we had to get through from yesterday. Right here. See that gap fill right here? Still looks like we have the opportunity to, go to, 735 is really good support. Could it get there? Possibly. Somewhere in here. There's just not a lot here. Once you get through and you're looking from right to left, there's just not a lot going on. But it's Tesla. Playboy stock, not doing so well here. Kind of, again, looks the same. I'm just pulling a bunch of names out here. K-Web, I've been interested in this. This is the Chinese internet stock. I want to show you why I'm interested in this. Now, let's take out this whole, this is like kind of exactly what our stocks look like, right? In here that we're looking at right now. We saw this big up, and then this down, and then this kind of layoff right here. I want to take out that whole giant up move that happened right here. And let's kind of tag it about 75. We're still about 40% off of that high. If we take this high right here, we're 100, we're down 39, we're 60% off. So I think this is kind of an interesting thing to look at. A problem is, do I think the regulations are going to really stifle and cause a problem with this? I mean, I think there is potential for that. We're well below this right now, trading at 38.66. So we're down in this neighborhood over here. That's a problem. I think that, what we have here is this major move down right here was a precursor to what we're seeing in our market. We saw here, nothing, we saw that kind of same move here, but then leveling off. Interesting. TLT, this is a long bond, obviously doing what it does in this kind of situation. Yields are actually going down today. Yes, they are. We're not seeing any kind of move from the Fed. We saw this kind of wonking back and forth on the long bond. Rates did tick up higher on this whole coronavirus pandemic variant, Omicron situation. Junk bonds, J&K, kind of came down pretty hard, moved back up as people are buying bonds again. eBay tagging our low point support levels that we looked at some time ago. The euro in a trading range right now. I find that kind of interesting. Not going anywhere, but coming down. I think that dollar really does have to come down a little bit from where we were. Turkey down 12.75% today on the lira, dropping 7.5% overnight. So right now we're trading at 17.38. Look at Turkey, by the way. Look at that. From 30 down to 17. Down about 50% on that. Looked at KWeb. EM, interesting. Also trading down a bit, having a bit of a downtrend. I mean, we look at this. I mean, I think it's pretty apparent to see, right? We're seeing lower. See this arc lower. Where are we here, though? I mean, do we have support here, which is about the 48 level? Looks kind of okay. Definitely lagging. Area that we've been looking to possibly add to. I think it's an interesting play. Let's go to the VIX. VIX did pop up dramatically. I thought it was interesting that we saw that big tail off a couple of weeks ago, about 10 days ago. VIX went to about 34, then dropped down dramatically. Came down to 18 and change. Only trading at about 22 right now with all of this going on. So there's not a lot of panic going on, and I think that's telling a lot that we're not seeing this move so dramatically. Bitcoin. So Bitcoin is trading right now at 46 and change. We tagged this some time ago, right? That 45 level. Let's look at this also. This is Ethereum. 3650 is kind of those levels that, as I mentioned, you want to put some of those possible buys in at 3650 or so. About 150 points away. You're down about what? It says 6%. That's not really right. That's from TradeStation's 6%. It's really down about 3.5%, 4% overall. But yeah, dropping dramatically off of those. They have different time stamps than Bitcoin itself, which is on UCD, I guess, or whatever time that is. What stocks do you have? I have nothing that you're giving me today. Is everybody just sleeping? Hello? This thing on? Hello? Any stocks you want me to look at in the last 2 minutes that we have? Otherwise, we're going to cut it and let you know that, of course, everything is available on TriggerCharts.com over on the TradeStation trading app platform. We are the #1 overall, so thank you so much for making us that. Hopefully, you're trying it. If you didn't buy yet, there is a free $199 value for anybody that wants to get a Commander Series subscription. If you're new to it, we will send you a 3 to 4 hour course on trading. So check that out. SI. Oh, I like SI. SI is interesting. You're talking about this SI? Silver or SI? So this is, waiting for data. This is Silvergate Capital Corp. Interesting. I think this is, it was up 3.5% yesterday, kind of on a down day. So kind of that was interesting. I think it was up 3% yesterday, if I'm not mistaken. What's interesting about this is a bank, and it's in the crypto space. There's a lot of lending in the area of Bitcoin. So you're seeing this kind of takedown right now in the crypto space. You're going to see it kind of reflected here. I do like this. I think it's an interesting name. I think it's kind of run up tremendously, but not as much. I mean, yes, from over here, of course, from 40 up to 220. You see this really nice move down, though, from 230 down to 140. And what I liked about this was you kind of saw 132 is kind of your out level here. We saw the resistance kind of 146, kind of approximately on that level, but kind of an interesting something to get involved in. More of a fundamental concept right now, not really trading very well, but something to kind of look at. Yeah. Yep. Silvergate Financial. Anyway, thanks so much for joining me this week. And we are going to be here once more for the end of 2021. Not next week, but the week after. Thanks so much. This recording is now ending.